Welcome to the section on fundamental analysis. In these lessons, I'll explain where to find news which affects the market, how to trade the news, and more. So let's start this lesson by explaining some of the major economic news which impacts the market. The fundamental analysis depends on fundamental events such as interest rates, unemployment rates, and other economic factors. Now, I've explained previously the importance of fundamental analysis and how a single economic event can have so much impact on the market in an instant. So, as a trader, you should always check for important Forex news. Since Forex news can happen daily, you should likewise check the news at least daily and monitor your trades. Now, there are weeks in trading where news really doesn't happen at all or simply isn't very important. To keep you informed on the news that happens daily, you can use the trading news websites, and I'll share with you in another lesson some of the websites and the apps that I use to get up-to-date news on Forex, and it'll be really good for you too. For now, though, let's continue by mentioning some of the most important events which affect the market and when these events will happen. Let's start with the unemployment rate. Now, this report is really important not only for the economies of the countries giving the report, but also for the value of currencies. The unemployment rate is simply a measurement of the number of people who don't have jobs. Now, this report is published monthly, and it calculates the number of unemployed people in a single month. The unemployment rate has a lot of impact on the Forex market because it shifts the price in a couple seconds. Non-farm payrolls is the responsible event for the unemployment rate and other data in the United States. Another high-impact event in trading is the interest rate. Monthly meetings of the major central banks around the world have a big impact on the Forex market. The central banks meet to set the next interest rates, and they also discuss policy plans. One of the major central banks in the United States is the Federal Reserve. The event where they report is called the Federal Open Market Committee, or the FOMC meeting. And that report has a really high impact on the market. If the Federal Reserve raises rates, then the US dollar value will go up. If the Federal Reserve lowers rates, well, then the impact on the US dollar would be bearish because the value of the US dollar will go down. Besides the FOMC meeting in the United States, the monthly meetings of 19 member states of the Monetary Union in Europe are also important in the Forex market as they release new reports on monetary policy. Likewise, the Bank of England meeting is important for the British pound. The new report that gets published each month affects not only the British pound, but other currencies in the Forex market. Similarly, the meeting of the Reserve Bank of Australia has a lot of impact on currencies in the Forex market too. The Bank of Japan, that's the central bank of that country, and it's responsible for the monetary policies which are published every month. Those are just a few examples. Besides the meeting of the central banks mentioned, there are other meetings of central banks from New Zealand and Canada and other places. Let's now talk about the Consumer Price Index, or CPI, which is an event that impacts the market at a very high level. Now, the CPI event occurs each month, and it can lead to changes in monetary policies of central banks. These changes can strengthen or weaken currency pairs in the Forex market. The CPI report collects statistics of its citizens. For example, it collects the information about the products which people buy. Now, the gross domestic product, or GDP, measures the economy of a country, including its health, economics, and other factors. A GDP report, which is published quarterly, shares the economic growth and health of a country in different time periods. There are other news events which can have an impact on currency pairs as well, but may not be as significant. Besides the Forex economic events I mentioned, there are unplanned Forex events too. Now, these events are unpredictable and surprising for most traders. Unpredicted Forex news can happen at any time, from political speeches, central bank speeches, terrorist attacks, wars between countries. Now, as a trader, you should always be prepared for unexpected news on Forex, which can happen at any moment. So, to protect your trades from unexpected news, use stop loss in your trades. Okay? As I've been talking about, major economic events are very important. So, you should remember these events as they have a lot of impact on your trading. Okay, let's continue by showing you how to find these events using different websites so you won't miss Forex news, which again will impact your trading.